I think we are live, ready to go. If anybody's with me today, let me know that you can hear me. Let me know where you are listening from. I always love to find out where everybody's at in the world. Okay, I'm going to go ahead and get started. I think I'm just 1 or 2 minutes early, but we are here who's going to be here, so I'm going to say let's do it. Hello, my Life with Crypto brothers and sisters. Welcome to another Money Monday crypto training. I'm your host, Kelly Sunshall. Today I'll be covering part 2 of our crypto trading live series. And in this segment, we'll begin unraveling the mysteries of technical analysis, a powerful tool for predicting price movements. So let's go ahead and get started. Before we can dive too far into actual technical analysis, we must first make sure that we all understand some basic essentials and also have access to a charting tool. So I'm going to start here first. First, you'll need to use a charting platform. Now, there's many out there to choose from, but the one that I use and that most of the people that I know in the crypto universe use is TradingView. You can go to tradingview.com. They have a free and paid version. And the free version is really good enough to start. I used the free version for many years before I finally upgraded to a paid version. So when the advertisements start to bug you, that's the way I look at it, that's when you'll probably want to upgrade. That means you're using it often enough to justify upgrading. So once you sign up for tradingview.com, I want you to start learning how to use the basic components within TradingView. And TradingView is a very, very powerful tool. I'm still learning how to use some functionality of it, but I've gotten pretty good at using the parts that I really need. And here's some of the parts that I think you really need. You want to know where to enter the ticker symbol. You'll want to know how to change the graph from candles to a line chart, perhaps. You want to know how to change the time frame from daily, weekly, or monthly, or maybe even hourly, depending on what kind of trader you want to be. And you want to know how to expand the chart, left and right over time, or expand the chart up and down to spread out the candles so you can see them better. And I do have a screenshot here to help you understand what I'm trying to tell you with my words. So here's a screenshot of my TradingView account. You can see up in the upper left-hand corner here, it says BTC USD. That is where you want to click to change the ticker. And you would click on it. And if you want to know, say, the price of ETH, you would type in ETH, and it would give you lots of choices to choose from. And those choices are the price as it shows on different centralized exchanges. So you get to pick one. I use Coinbase because that's the one that, I follow the most. So the next thing I want you to notice is right next to it, there's a letter here, D. D as in day, or D as in David. That stands for day, or a daily time frame. You want to click this if you want to change the time frame to a longer horizon time frame, which would be like a weekly or a monthly. And I like to use weekly and monthly time frames to try to get a better sense of what the overall trend is. Now, if you want to be a shorter term trader, you might look at the daily for your long-term trend and look at the hourly or even 15-minute time frame to decide when you might want to get in and get out. But you do that up here. You would click that and then you would choose it. So the one right next to it looks like candles. This is where you click to change from a candle to a line chart if you don't want to use candles. There are times when you may not want to see all the busyness on the screen with all the candles, and you may want to just see the overall trend in a line chart. This is where you would change that. So now, how do you move back and forth over time or up and down to expand and contract? So down on the bottom here, you'll see are the dates. And I've highlighted it with this green dotted line. All you have to do is click anywhere in that area with the left mouse click. Just click and hold, and then you can drag back and forth. And that will let you go backwards and forwards in time. If you want to expand or contract the chart so that you can maybe see the candles better or shrink them if they've gotten too big, you do that on the right-hand side here. In this area where the prices are, You just click in anywhere in this region with your left mouse click, and then click and hold, and then you can drag up and down. So those are really some good basics to start with. All right, let's go on to number 2. The second thing that I think you need before you really want to start diving into some intense technical analysis. If you plan to trade Bitcoin, you'll really need to understand some basics about Bitcoin metrics, namely 1 Bitcoin equals 100 million Satoshis, and a Satoshi is the smallest unit of a Bitcoin. Here it is in number format. So 1 Satoshi equals, this is 0.000000001 Bitcoins. That is 7 zeros and a 1. It's 8 decimal places. That is a Satoshi. And you don't have to buy or own 1 whole Bitcoin. You can buy and own any amount of Satoshis. So you could own half a Bitcoin, a quarter of a Bitcoin, a tenth of a Bitcoin. And I've got another image to show you that will describe this a little bit better. But I also want to tell you that 1 Bitcoin, like I said earlier here, equals 100 million Satoshis. So here's an image to help you better understand what I'm saying. So this chart shows you 1 Satoshi equals 0.0000007 zeros and a 1 Satoshi. Okay. Now, if you wanted to own, I don't know, say, I don't know what would be half of a Bitcoin in this chart, but let's say we've got 100 million. Well, let's say you wanted to own 100,000 Satoshis. That would be 0.001 Bitcoins. So it's just good to know that you don't have to have $40,000 to start trading. You can start trading Bitcoin with $100. And there's many calculators that'll show you how to convert into your dollars into Satoshis. And I'm going to put one of those calculators in the comments after this training so that you can go determine, well, if I have $100 to spend, how many Satoshis is that? Okay, let's go on to number 3. The third thing that I think is important to know is make sure you understand basic market dynamics and their terms. Here's a few that I think you should know. First one, FOMO, fear of missing out. Don't chase a token up just because you're afraid of missing out on an opportunity. Learn to be patient and wait for the next opportunity, because just like we don't always breathe in, we have to sometimes breathe out. That's a cycle. Markets are the same way. They have to breathe. So they'll go up and 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 up, but eventually at some point they have to breathe and they'll have a little bit of a pullback. Now, how deeply they breathe is what, we all wish we knew ahead of time. But you will have other opportunities. If you're always the kind of trader who's chasing what's already happened, then you're going to end up being what we call the exit liquidity for the people who've already gotten in the trade. So be patient if you need. Don't chase. Don't FOMO in. So what's a bull and a bear market? So a bull is someone who is expecting the price to go higher, and a bear is someone who expects the price to go lower. So a bull market is when the prices are running up. Bear market is when they're coming down. How about market cap? The market capitalization of an asset is calculated by the current supply of coins by the current market price of that coin. It's important to understand market cap. I'm not going to go into it in a great deal right now because market cap is part of fundamental analysis a little bit more, but it's good to recognize whether whether the market cap is super low or super high for particular cryptocurrencies. Let's see what else I have on here. How about a bubble? Does everybody know what a bubble is? I'm going to share with you that I did not know what a bubble was when I first started way back in the 2010, 2012, 2015, whenever it was. I did not totally understand a bubble in the crypto market because you don't see a lot of bubbles in the stock market. So a bubble is when prices are irrationally high compared to the actual value of an asset. Now a bubble can be for just an asset, but a bubble can also be for a market. Now I pay more attention to bubbles in markets than I do for assets right now. So what does a bubble in a market look like? Well, when you start to see the chart literally go parabolic, that is a visual representation of irrational buying. It's like, what could possibly be moving people to buy when the price is already this high? So you want to be careful of bubbles and don't be the person that's chasing that bubble when it's going up, because when it pops, it's going to drop like a rock. All right, what is day trading? Day trading is when a trader opens a trading position in the market and closes it on the same day. So a day trader does not want to hold a trade past the end of the day. Now, what does that mean in crypto? Because crypto trades 24/7. Well, every trader is going to have to make that decision for themselves. Maybe if they open it in the morning, they want to make sure it's closed before they go to bed at night. I don't know. It's up to them how they want to do that. Swing trading is a little bit different. It's a little bit longer period of time. This method of trading looks for buying and selling opportunities over weeks or months. A swing trader wants to try to capture the main part of a price change. So a swing trader doesn't try to catch the total bottom or the total top. They want to capture the middle chunk of it as much as possible. Now, I didn't put this one in there, but I'm going to throw in cycle trading for you because that's the kind of trader I would call myself for the last number of years. Cycle trading is following the Bitcoin halving cycle, which happens roughly every 4 years. And it's been very consistent that the markets go up during the halving cycle and they go down afterwards. So that's another style of trading. So that's all I have for you today. I wanted to give you these basics in order for us all to be on the same page. And we will continue talking about trading and technical analysis over the coming weeks. So that's it for today. I hope you enjoyed it. If you got something out of it, please leave a comment in the comment section. I'd love to hear from you, and I appreciate you listening. Stay tuned for next week's part 3 on crypto trading. And please like and share the video and to help me spread the word about the future of finance. It's amazing how many people are still afraid of crypto because of all the scams. And that's partly why I'm here. I want to help people know how to be safe with crypto. So as always, stay curious, keep learning, share your thoughts or questions in the comments, and I will see you all next week. Bye for now.